Hey, it's me, Paul Mendes, and I'm going to be here telling you about my top 2 TradingView Pine Script indicators that I use all the time. Like, I'm not joking. I use these all the time. I didn't just randomly ask ChatGPT to freaking make up a script for me or any of that mumbo jumbo. This is not fluff. I use these very simple indicators all the time. I'm going to show you how I use them, and I'm going to show you how you can code them up. And I don't know, we're going to mess around with them. All right. So, yes, you've probably seen the RSI and the MACD before. You probably have. And you probably see them so much where you overlook them because you're like, oh, that's not a very flashy indicator. I don't want to use that. I want the one with all the bells and the whistles. Well, guess what, buddy? You got to keep it simple, stupid. So in this video, we're just going to be jumping right into it. I'm going to explain to you the RSI and how I use it. And then I'm going to explain to you the MACD, how I use it. And I'm going to show you some other things that you might be interested in. So if you've never used TradingView, this is it. It brings in all the data from all the brokers around the world, and they have very good charting. This isn't a tutorial on TradingView, but it's a very powerful platform for technical analysis. And then they also have built in the Pine script here. It's called the Pine editor. You can come down here and pull this up. And this is where we're going to be building all of these cool indicators. Now, you don't have to know anything about this to add indicators to your chart. You can add the RSI just like that by typing it in here, and it pops up. But if you want to modify this in any way or see how it works internally, then you can go and pull the code up and look at it, okay? And you might look at it and be like, I don't know what any of this means. That's fine. We're going to talk about that. So not only are we going to cover how these indicators work from a technical analysis standpoint, but we're also going to cover internally the mathematical concepts that make them work. And once you understand that, then you really start to understand how all these indicators are pretty much the same, and there's nothing special about each one. And that's why I like to use these simple ones, because you're really just looking at a derivative of the price using these indicators, and they just help filter out some of the noise. Okay, there's nothing special about indicators. So the first indicator that I use all the time is the relative strength indicator, and this one comes like standard on pretty much any charting platform, and it works really well. So it's an oscillator that gives you the momentum of the price, and its main focus is overbought and oversold levels. So when you see this little purple line go up here, it means it's overbought, and so you probably should be looking to sell. And when it comes down here below this dotted line, it's oversold, and that's when you should be looking to buy. So you would essentially just go, okay, sell here, buy here, sell here, buy here, sell here, buy here. And when you look at it, it kind of makes sense with price. Like, this is a sell, this would be a buy, and I go, wow, that looks like it works really well. However, if you back test that, it's not going to give you perfect results, but it does actually work really well. And that's why I use it, because it is that simple. And that's it. Honestly, this is a very good tool, but you need to use it with something else. And there's times when it doesn't work, when the price is already moving up in a strong trend, then it doesn't work so well. Okay. Because it's going to be constantly up here, and you'll be selling it here. You'll be selling it here even. You might even sell it here, and it just keeps going and going. So you can't catch big trends if you're buying and selling based off of the overbought and oversold. So that's when the RSI doesn't do so well. And when it does do well is when you're going sideways. Now, I don't use the RSI just alone unless I'm trading meme coins, and I won't get into that. But this tool alone is very good. I don't use this yellow line. This is the moving average. Some people use it as a crossover. If this purple line, which is the RSI, crosses over that, they might look for a sell. I don't do any of that. I just do overbought and oversold. And that works really well, along with looking at price action, maybe looking for a simple bear flag or a bull flag. You get some of those things happening at the same time, or you get some divergence between these peaks. And if you go into the code, it's not that complex. All right, this one is, this specific indicator in TradingView has evolved over the years where they took the RSI, the simple calculation, and added on a bunch of extra stuff that doesn't need to be in there. It's really not this complicated. Okay, so if we create a working copy of this, we can go and just rip out most of this stuff and it's still going to work. Okay, so I don't need any of this. Honestly, we'll just delete all of that. Like, you don't need any of that. In fact, I can just go ahead and I can delete all of that. Okay, and we just have a source, we have a length, and then we can do the RSI is equal to the TA.RSI, and then our source is going to be RSI source input, and our length will be the RSI length input, and we'll just plot it, plot RSI. Make sure we give it the same color as color purple, just like that. I'll give it a save, and we might lose some of the coloring here. So actually I have to add it to the chart now. Add that to the chart, and it's essentially the same thing. We lost the horizontal lines here, so we can just go ahead and add those back. Those were right here, the midline, upper band, and the lower band. So actually, we can just grab this right here. So all this stuff, and you can see instead of using the TA RSI in here, they're actually using, this is how you would calculate it if you didn't have the built-in RSI function. So just grab that, and I'll walk you through how that actually works. So this is the built-in function, and if you go ahead and you click on that and you open that up, it's going to show you how they calculate it here. All right. And it's less efficient, right? So it's doing the less efficient way in the actual indicator that is default on TradingView for some reason, instead of using the built-in, probably because they want you to see how it's calculated. And what it's doing is it's taking the difference of the current close and the previous close. So if the close today is 100 and yesterday it was 50, then that would be 50. And it's taking the max value here, whether that be 50, which is going to be the difference here, or 0. So it's always going to be 50. The reason this is here because it doesn't want to grab a negative value. So it's always going to grab the positive value. And then it's doing the same thing here for the downward TA change. This is going to be the previous value, previous close minus the current close. So that difference. And then we're getting the root mean average, which is just a weighted moving average pretty much of these two values, the length and the upward, divided by the same thing, the downward and the length. We're just putting in this little equation here, and that's putting it on the 100 scale. So the acceleration, pretty much, we're looking at the upward acceleration of the close and the lower acceleration of the close, and we're taking the average of those and we're putting them on a 0 to 100 scale. So we're getting this relative acceleration on this scale from 0 to 100. That's how you can think of it. It's strength, it's acceleration, it's how fast the price is moving up, how fast the price is moving down. That's what the relative strength is. Okay, so we can take the TA RSI, or we can do this. This is the same thing. We're getting the change of the close, and then we're doing it for the upwards and the downwards, and we're putting it in this big equation. But as we saw, that's less efficient, so we're not going to do that. But let me just save this, and now we get pretty much the same thing. All right, we get the same exact graph. We're just missing this yellow line here. We're getting the fill as well, this green fill. So we don't need this. Now we have our own RSI without all of the fluff. And notice how it's much cleaner than the default indicator, because the default one comes with a bunch of extra stuff that we just really don't need if we're trying to focus on the RSI. So that's the RSI. Think of it as a relative acceleration of price. Okay, that's how you can think of the RSI. And that's how we can identify when a trend is about to reverse, because you never know if you're in a trend until maybe the trend's about to end. It's like, how can you tell if we're trending? It's a strange thing. You don't know when you're trending until you're actually in the trend, or until the trend's about to end. But you want to catch the trend right in the beginning. You want to catch the trend right when it starts so you can ride the whole thing up. So you really want to know when the trend is about to end. That way you can catch the next trend. So we're really looking for a weakening trend that we're in, right? So we're looking for like the acceleration to slow down at, what looks like to be the top of a trend. And that's why we're selling in these overbought areas. But we obviously don't want to sell too early. So we'll look for things like divergence or less acceleration or we can use other indicators to help us find those things. And that's where the MACD comes in for me. And I use it in conjunction with the RSI to help me find these reversals of the trends. So the MACD that I like to use is this MACD 4C. And this is actually another super simple indicator. And what this one does is it essentially takes two moving averages and it's taking the difference between the two. So these columns here, these big little mountains and troughs here, that's actually the difference of two EMAs coming closer or further away from each other. So let me show you what that looks like. I'm going to pull up an EMA here, moving average exponential, and I'll add in 2 here. And one is going to be the 12, okay? And we'll just make that, green, okay? And the other one is going to be, it's going to be yellow, and we'll make that one the 26, okay? And if you look here, there's a fast moving average and there's a slow moving average in the MACD. And one has a length of 12 and the other one has a length of 26. And if we look closely, you can start to see the shape of this wave down here between these two lines here. Okay, so right here, and when they cross over, that's the 0 line on the MACD. So right here, if you look, the green crosses above the yellow, and now we're getting a green MACD. And you can start to see the MACD being shaped here between the yellow and the green. All right. Now this gap is getting wider. This difference is getting wider between these two moving averages. And you can see that happening here. And then it gets a little smaller. Okay. And you can see it getting smaller here. Then here it's growing, it's getting even wider. And then you can see now the MACD is growing higher. All right. We got a little peak here. And then it starts to come down, starts to get smaller and smaller until it crosses over. And now the MACD is red. And that's the MACD. That's as simple as it is. It's just the difference between two moving averages. And this is also a momentum indicator that I use all the time. And this one specifically, I use just for finding divergence and convergence. Okay, it's right in the name, moving average, convergence, divergence. And it works very, very good for this. So in this case, this is gold right here. All right. What I'm about to share with you is literally going to change your trading. And I probably shouldn't be giving this away for free. Here it is. Here's your wave right here from your MACD. Here's your peak. And you can see in the price, it's peaked here. In the wave, it's peaked here. We got a lower trough down here. And then we have the next wave, the next crossover of the moving averages, and it's green right here. And then you can see the price went higher. It made a higher high. If you look down here at the MACDs, this wave actually went lower. So what do we call that? We call that divergence, because in this case, the price is going higher and the MACD is actually making it lower. So these two things are diverging away from each other. In this case, this would indicate to me that there is weakness in this move and it's going to come down. And that's exactly what it's doing. And how much it's going to come down, that's something that only experience can tell you. And, after you see a bunch of these and the shape of them and how they work, you'll start to understand that like this move is probably going to go a little bit deeper than where it normally goes. So the RSI is going to show us the acceleration and the MACD is going to show us when there's weakness. We don't care about the direction we're in. We care about the direction in the future because that's where we're going to make the most money. We are forecasting. We don't care about right now. And no one cares about the history. I don't care. Oh, this is why I did this. Who cares about the news? We don't care about that. We care about the future. So these are the top two indicators that I use all the time. And because I use them all the time, I created one indicator that does all this for me in Pine Script. So I created this indicator that combines both of these and shows me divergence and it shows me a multi-time frame. So you can see the color is a little bit different. I do have a different color schemas here, different color modes, but we can go ahead and switch it to the normal color. Okay. We're also going to get the RSI with this tool. And you might be wondering like, okay, where's the RSI? The RSI in this case shows up here. It actually shows up on the chart. So we don't have to have two different panes down here. And there's no way, because the RSI is on a 0 to 100 scale. We can't have the RSI and the MACD on the same scale. It doesn't work like that. Okay, so you only can have one Y scale. So we're going to take the Y scale is going to be the MACD, and the RSI is actually scaled on here, where the price is actually the RSI. And you don't have to understand it. Okay, so I've set this to 0. So this is just so it loads up a little bit quicker. And the RSI bands, I have it set to just show only the last 25. I'll set this to 0 so you can get all the data here. Once you use this for a while, you don't like to see all the extra lines, but just for viewing purposes, we'll show you. So this cuts down on a lot of the noise. Also, I only need one indicator instead of two. So you can see here how the price is getting up into this red area, and that would be the overbought area on the RSI. And you can see here coming up, crossing over the overbought zone. All right, and then it's bouncing off. So these are just, it's the RSI just on the chart. So you don't have to worry about looking down here. Maybe you like to look at the whole chart and you don't want to have this indicator up and you might miss it. So there you get it, and you can see how well it interacts with it on the chart. You're getting really nice bounces here all the way through. Obviously, like I said, when it's trending, then it's not going to really respect that upper bound. Okay, so the RSI isn't perfect. And then we even have this table, which shows us the next 3 time frames for the RSI levels, as well as divergence. So we got to see all the time frames that are relevant to us. So if I switch to the 4 hour, we'll get the current time frame, the 1 day, and the 1 week. If I switch to the 1 hour, it'll show the next 3 time frames. Okay, we got the 60, 240, 1 day. All right, and you start to see how this tool can help you. And then you get these lines here. This is showing the divergence on the MACD, and it's popping up here. We're getting a sell signal. Again, I wouldn't just take these blindly. You have to look at the chart. This isn't just a fully automated indicator, but it does take away a lot of the noise in the thought process. So I'm not going to go through and cherry pick perfect signals. You can go and be like, wow, this indicator works really well. I don't care. I use this indicator all the time. I use both of these all the time. You don't have to believe me. You don't have to like trade this. I don't care if you do or if you don't. I'm just showing you the top 2 indicators that I use all the time in Pine Script that you can use, and you can modify them however you'd like. And I'm telling you, you just keep it simple, and this works for me. So I've made this whole indicator into one. You get all of this and a lot more. There's a lot more features to this. And if you want to get access to it, you can just go ahead to my website and check it out there. There's a free trial for that, or you just use these 2 indicators and you don't have to worry about that. So you can see here in the tool, it's giving me decent signals. All right, I wouldn't call them exactly signals, but like indications where I might be looking to sell or looking to buy. In some cases, you can avoid that. You might want to wait until it comes down to a lower area. That makes sense with the RSI in conjunction with MACD, but it simplifies things for me. And that's why I made this, because I use these 2 indicators all the time. So I put them together as one, and it works really well. And another cool feature about this indicator is if you trade divergence a lot, you might notice that sometimes divergence disappears after a while. In this case, it didn't. Say you're looking at this, right? You're watching this chart and now you're getting divergence here. Okay. In some cases, not in this one specifically, but in some cases, this price might go higher and higher. And then this MACD wave would grow higher and divergence would disappear. And your whole thesis will go out the window and you'll lose money. So you have to wait sometimes for the flag or for it to hit like an overbought zone on the RSI before you actually go and enter in a short in something like this. Okay, here you didn't really get it. You had a flag here, so it's hard, right? Here, so it starts to show where the divergence starts, and it highlights the candles all the way through until we go below the 0 here. And typically that tends to be a good area I've noticed to go short is right when the divergence ends. Here we got some green. Yeah, so that's a good example right there. So here you can see there was some bullish divergence starting, but then it went lower and that bullish divergence stopped because this wave got a little bit bigger. So that's why some people will say, oh, divergence doesn't work. You have to wait until it either completes or it's in conjunction with something else. So there's always going to be uncertainty. There's always going to be risk. And you can't just trade these things blindly. You have to watch for certain things to line up. So it's really important to understand the nuances of these indicators, how they work under the hood, what they're looking at, what they're designed for. So don't complicate it further with more stuff. Get good with them, get experience, see how they work, and create your own strategies with these tools. I've been using these for 10 years. It doesn't mean that you had to use them, but I'm telling you that they work, and that's why I use them. So if you have any questions, leave me a comment. You can hit me up on my website. If you need any help with Pine Script or anything TradingView related, or even with crypto, I know a lot about that, or getting cash in different countries, or trading crypto and using crypto to buy things in real life, whatever it may be, I've probably done it. I've been around the block a few times. So peace out.